Good morning, everybody. This is Ryan, and it is morning and afternoon, I guess, depending on where you're at. On the East Coast, it's afternoon. Welcome out, everybody. If you wouldn't mind, just confirm on the text chat that you can hear what's going on. Brenda, how are you doing, Trip? Good to see you. Everybody's saying happy Friday. Lee, how you doing, pal? Thanks for the help this morning. All right. Well, let us begin, shall we? Let's see. This will stop screen. Do you want? No, I don't. Let's get over to the one that I do want. No. All right, guys. I don't know if you're seeing this quite yet. It's kind of clumsy. I wasn't on the screen. I thought I was. So we don't need subtitles. Thank you very much. All right. For those who can see this, just somebody let me know if you can, in the text chat, if you can see the slide that is the beginning slide. It says Trading Coach Playbook. You got my face on it. All right, very good. All right, we should be. Oh, come on. There we go. I've got one little glitch here, guys, that it keeps hiding the chat. The reason I'm stumbling here is I keep losing the chat, so I've got to be able to see that. There we go. All right, our disclaimer. You should all have this memorized by now, but we will not be giving you any specific trading advice on any particular stocks. Everything that we talk about here is educational. It's designed for that. It's not intended to be advice on any particular trading scenarios. The market has risks. You should know that. There's no such thing as risk-free trading. Well, there actually is. That is if you don't trade with any money, right? If you have no money at risk, then there's no risk except to your ego. But market has risk. If you're going to play in it, you better have control of that risk. We've talked about this many times. All right. Once again, content. Rob puts a tremendous amount of content, a lot of work into this. I really appreciate that and admire that. I'm glad to have a little piece of that in terms of adding some of the content, the value content that Rob adds to this, his training platform. And I'm thrilled to be able to do that every once in a while. Okay. Event coming up with Brandon. And we're off to the races. All right, guys. I hesitate every time there's any kind of an issue like this. I hesitate to ever say anything because I don't believe in making excuses. So, but I do want to tell you that I'm going to follow the format that we did the last time we got together. And that is we'll have a training session for about half the class, and then we'll go directly to application with the charting so that we can do some hands-on. But my preparation for this was not as exhausting as it normally is. I usually put 2 or 3 hours of prep into teaching a class, at least 2 or 3 hours. This week we had a change in the lineups. I was supposed to teach next week, and they asked me to teach this week. And they gave me plenty of time. It's just that this was not a good week per se to put in that kind of hours. So when I did the preparation, I came up with an idea. Didn't take me too long to put this together, but I really think there's some value in what we're going to talk about here in the next half an hour or so. And then we'll spend the balance of the training session in the charts, actually doing some hands-on stuff. Okay. Okay, you're right, Trip. I'm looking down. Lee says, I don't think Ryan's reading. I'm moving some things around. So you said that you could see it. Let me change the, we can do this. Hang on. Thanks for catching that. Please be patient. We will go right here. Now, can you see this? The slide says, why get good at trading? Boom. Thanks for catching that. All right, we're good. We're on page now. All right, my friends. I want you to think about this. Why get good at trading? Is this just a ridiculously obvious question, a redundant question, rhetorical question? Yeah, maybe. But I want to spend some time on this because I think this is really, really valuable for you today to focus on this. What's your motive for trading? What's your objective for trading? Now, if it's too personal, obviously don't do it. But I'm going to ask you to share just some cryptic comments with regard to these two questions. So let's start with the first one. What's your motive? And then what's your objective? There's two different things. If I just ask what's your motive, I would wind up getting answers that would cover both of these questions, but I want to separate it out a little bit. So time freedom, the first two that came up, both of them said freedom. Not sure exactly what that means. I could guess on time freedom. I could guess on all of it because I relate to it. But if you can put a little bit more clarity to it, that would be fine. It's fine, but I get it. I get what you're trying to say there. Let's see, to be able to do whatever I want, whenever I want. Okay, see, I like that. That's a good clarification. Others, please comment. What is your motive? What drives you? Now, you may think it's difficult to separate that out from objective. I'll make that easier for you, but just answer this first one. Jennifer, freedom to do what I want, when I want. Someone else is thinking the same thing. Exactly. Tripp was thinking the exact same thing, which is good. That's excellent. Now, anybody else? Anybody else? What's your motive? What drives you to try to get good at trading? To break it down, pay the bills, have flexibility in time. Okay, well, let's we're not getting any more responses on that, really. Let's go to the next question. What's your objective? So let's say if you're good at trading, what's the objective? What does that accomplish for you? What are you trying to acquire or to accomplish because you were good at trading? So I was good at trading. That would look like what? Okay. Mike says motive is an internal motivation. Objective is an external goal or outcome. Exactly. And this is what I'm trying to get to. So now you put some specifics, thank you, Michael, on those, the goal or the outcome. What's the outcome of getting good at trading? Let's see, to make money, to make as much money as I make now in 2 to 3 hours a day. Okay, excellent, excellent. Jennifer, I'm volunteering. I need funds to be able to do that. Also to keep me comfortable in retirement. Okay. Excellent. I want to, I've mentioned this before to you guys, but repetition is the mother of skill. If this rings a bell, if this resonates with you, write this down. Whenever you state an objective / goal, whatever you want to call it, okay, add these two qualifiers. My goal is to get good at trading so I can have the money to volunteer, to do the voluntary work that I want to do, which is what Jennifer says. Okay, Jennifer, here you go. Write this down. So that, and then you fill that in. So that what? I want to volunteer so that, and fill something in. Then you write with that, okay, and with that, and you have another blank and you fill that blank in. So that, with that. Please think about that. If it resonates, write it down. My motive for getting good at trading, my motive is to have freedom, freedom to be able to do whatever I want. So that, and this is where the objective comes in, so that I can have time during any day that I want to do what? So, okay, so that I will have time. Okay. And with that time, I will, and you fill it in. There's an interesting thing that works with your brain when you translate a goal or objective into something that is absolutely in harmony with your core values. Then your subconscious jumps in and gets to work to help you accomplish it. It's really hard, or let me say it a different way. It's really easy to state a goal and not be able to have your subconscious mind jump in and work for you to make that happen. It's very easy to state a goal and have your subconscious mind work against you, depending on how you phrase it. But when you say, this is what I want to accomplish, I want to get good at trading. Yeah. And, well, so I can make money. Okay, so you make money. So what? So that what? What are you going to do with the money? Well, I will do this and this. Now, if that's in harmony with your core values, your subconscious mind goes to work to help you accomplish that. That's where you marshal all of your forces together. So why get good at trading? I want to get good at trading so that you fill in the blank. And with that, you fill in the blank. And now you have a much, much better chance of actually accomplishing what it is you're setting out to do. That makes sense? Volunteering so that I can help people in need via the Red Cross, and so that I'm not concerned about living on the street. Okay? You would flip those, you could flip those around in either order, but you're dealing with that, so that, and with that. Okay, so I'm going to give you some other reasons why, some other motives for getting good at trading. Okay, what you will do with it is the add-ons, so that and with that. There are some other reasons why getting good at trading is important for your so that and your with that. All right, let's investigate that. Let's talk about hurricanes for a minute. Who can tell me the two places in a hurricane that are safe? Hurricanes are deadly. They are devastating and they can be deadly. But there's two places where you are safe. Okay, one of them is in the eye, and the other is way far away. That's what Tripp said. Right in the middle and way far away. Helen says in the eye. Jennifer, yep. And Diane says outer space. Well, there you go. That's the way far away. All right. That's the way far away. Here we go. There's two places in the hurricane. Now, can you survive if you're closer than way far away? Yes, but you're going to take some buffeting. And the closer you get towards that middle, the more dangerous and deadly it becomes, unless you are right dead center. And how do you get dead center in a hurricane? Very difficult to be able to stay right there because it's moving. And if you can get in that center and stay there, you can survive. You can survive. The safest play is way far away. So let's compare that to trading. Is trading dangerous like a hurricane? Yes. Yes, yes, yes. Anything good come out of a hurricane? Well, yeah, some things good can come out of it, but usually if you're caught up in it, it can be real devastating. If you get right in the middle of it, you never see any clouds. It's beautiful, it's calm, it's always sunny. It's really nice, but it's dangerous unless you're dead center, unless you're really connected with the market and you are able to trade with it, not against it, flow with it, bend with it. You know the rules, you know how to stay in that middle. That's great. Otherwise, the farther away you are, the safer it is. And that's the way risk is in general. But with trading, guys, my suggestion is that you either get really good at it or you stay away from it. There really is not any happy place in the middle. Okay? You can maybe survive, you'll get bashed and thrashed around, and it can be lethal to you financially. unless you really get good, which means you can stay in the middle of that and dance with it. But just kind of being in it partially, or because you think this might be a good idea, I think I can do this. Unless you're serious about getting good at it, you run the risk of getting abused by it. Now, the good thing is that you can learn this without having to get killed. In the process of doing simulated trading that is very real, completely real, just not funded, and then transitioning to a little bit of funding and then a little bit more, you kind of dose your way into it. Those can be ways that you can learn how to dance with the gorilla, so to speak, or how to be in a hurricane without getting killed. But you have to work on it. Okay. Jennifer says you have to go through the wall of the eye. It will come at you from two sides. Well, yeah, construction person insurance always do well. Not sure what. Oh, yeah, construction and insurance does well in a hurricane because of the aftermath. Sure, I get it. But the point is, guys, is that it's deadly. And therefore, you get good at it, or you stay away, or you keep yourself in a position where you can survive it, which means you're going through that training process. But as you go through the training process, you take some protection, like doing simulated and small positions until you can ramp up. Okay, here's another reason. Guys, see, what I'm talking about now is some of the challenges that we are facing in the world around us, where getting good at trading might be a smart thing to do. Let's talk about the national digital currency. There's a movement by many right now in the current government. This is not something that was invented by the current administration. This has been pushed by people on the fringes for a long time to develop a national digital currency and to get rid of hard money, which is, right now, gold, we got off the gold standard, and the only hard money that we really deal with on a daily basis is coins, quarters and occasionally a 50-cent piece, but mostly quarters and nickels and dimes and pennies, right? The national digital currency movement would get rid of all other forms of currency for a digital currency. And they're going to sing all kinds of praises and all kinds of reasons to do it. But there's one motivation and one motivation only. This is my bias. Show me a different motivation, I'll listen to it. But I've heard everything and I've determined that there is only one, and that's control. The nature of government from the eternities, from as far back as we can ever measure, the nature of governments has always been to morph into more and more control. Because those who get caught up in government see the necessity of controlling the populace in order for them to profligate the government. Okay? If you weren't in the government, if you're not in the government, you're not interested in the government running everything in your life. There's a few things you'd like it to do, but for the most part, free-minded people around the world want their government to stay the heck out of their way. The government and or people who become enmeshed and embroiled in the apparatchik part of the government always in the past, and I believe in the future, will always succumb to the temptation of seeing more control as a justifiable methodology for accomplishing what they think the role of the government is. And I don't think it's necessarily malicious all the time, or malicious in its beginnings, but it always becomes malicious. If it is not controlled, it always becomes malicious. This is what the founding fathers laid out, and whatever you think about the founding fathers, I frankly don't care. I don't want to get into that discussion, but there is no question that what was put together, that put this country together, was unique. It's never been done before. It is the longest lasting experiment in a self-governing environment that has ever been done in the history of the world. Far, far, far beyond any other constitutional form of government. No constitution has ever lasted where it's been tried anywhere the length of time that this has. So this experiment of self-governance is remarkably successful. For whatever faults you may find with it, it is incredibly successful. But it is the nature and disposition of almost all governments, of almost all people, that as soon as they get a little bit of authority as they perceive it, they begin to exercise dominion that is not righteous dominion, right? It is not altruistic dominion. It becomes self-serving and self-perpetuating. And the digital currency, a national digital currency, is for one thing and one thing only, and that is to have better control over the citizens in the country. If you are completely subject to a digital currency and you plug your card in, I suspect most of you have had the experience of plugging a card into some freaking machine and have it say, sorry, this doesn't work. And you're going, wait a minute, I've got funds, I have assets, I have money. This is my card, my access to my money. And some screen says, you can't have it. Now, you can pick up a rock, you can throw it through the screen, you can scream, you can jump up and down. If that machine says, you don't got it, you don't got it. Okay? That I don't like. That, if the entire economy and the access to your quote unquote, your property is determined by a screen that says, yes, you can have it, no, you can't. I think we have a little bit of a problem here. I love this phrase that has been rewritten and paraphrased, and this is the actual statement from Benjamin Franklin. You've probably seen versions of this, variations of this. That's fine, but they're variations off of this. Those who would give up essential liberty to purchase a little temporary safety deserve neither liberty or safety. And I've heard this phrased a lot of different ways. The sentiment is the same, but that's the actual statement. And so how is this national digital currency going to be sold? How is it being sold? How are they chumming the waters, priming the pump, so to speak? Oh, this is for your protection. This will give you flexibility. You'll have so much more ease of access, and it'll be so much more convenient than dragging around pieces of paper. Right. Those who give up essential liberties to purchase a little temporary safety deserve neither, and they will find themselves without either. Okay. Michael, currency goes digital, no reason for the banks. All it's needed is Federal Reserve control. Amen. Amen. This is not a good thing. Now, what does that have to do with trading? Well, this is interesting because you're trading, let's see, I jumped one. Okay, this is the one we're on. We'll go back to the one I jumped. When you're trading, everything is digital. Okay? Everything is digital. Now, I'm not saying that it won't happen. I'm scared that it will happen. Okay, I am. I'm scared that it will happen. And one of the consequences to it happening will be being subjected or subjective to some powers that can have access or control. Okay, I get that. Could that impact your ability to access your money? Perhaps, perhaps. But if I'm good at trading, the difficulties that may come through some of the things that are just, they seem to be coming at us like a freight train, is going to be easier to handle if I'm more flexible. If I can access markets from anywhere, anytime, anywhere in the world, any time of the day, I can continue to generate income that can be put into different places with perhaps more flexibility. I can have more options. Okay, I just want you to know that this is one of the things that's barreling down the road at us that you're going to have to deal with. Let's talk about this. The world reserve status, world currency, world reserve currency status. The United States is the world reserve currency, our dollar, the US dollar. If that changes, and I have bricks up there because and that's not even complete now because South Africa, there's others that are joining in on this. There is a move around the world to change the reserve currency from the US dollar to something else. Okay. Those who say, don't worry about it, it's been tried before, and we're the United States, and nobody would actually do that. Baloney. BS. They can and they will if there is an opportunity. And if we continue to do this self-effacing behavior that we've been doing of reducing our strength in the world, reducing the size of our economy, reducing our influence in the world, we're making ourselves year by year more susceptible to this happening. If it happens, what are the consequences? Guys, the consequences is a weaker U.S. economy. Okay. Will we drop our buying power by 35%? A lot of people think so. Okay. A lot of people think so. It will be significant, whether it's 25 or 30% or 35%. What if your buying power dropped 25% tomorrow? Guys, literally, if the U.S. reserve currency of the world was not the U.S. dollar, you would literally overnight lose some percentage of your buying power. The shift in global power would be pretty remarkable. Our position in the world is largely influenced by the fact that the currency that the world has to hold on reserve so that they can transact business and pay debts is the US dollar. That changes, our position in the world changes immediately. There's a reordering of international trade. What does that mean? Well, when we trade, our position in the world and the strength of our dollar has very much to do with which direction trade flows and what we pay for it. That would change dramatically if we were no longer considered the reserve currency. Our currency value would drop. Therefore, the benefits of doing certain trading, international trade, based on the strength of the US dollar would change, and that trade would go elsewhere. Another one, the rise in cost of borrowing. Guys, because we are the world reserve currency, it has a lot to do with our ability to borrow money. And we operate in a deficit, much to the chagrin of myself and many, many others, including some pretty smart people. We operate in a huge operating deficit. And the only way we survive, guys, picture somebody running up a beach with a wave 14 feet tall right behind them. And in that wave is debris and stuff that's been drug up, rocks and seashells and pieces of wood and all kinds of garbage in that wave. And right now, the person running up the beach is just barely keeping up with the wave, which is right over their head. And as long as they keep running, the wave doesn't quite crash on them. But all it takes is a stumble, one stumble, and that wave with all of the debris and the garbage comes crashing down upon it. It's not going to be fun for the person running up the beach. That's where we're at. And we are borrowing every single day because we're spending in deficit. Such big deficit, we are totally dependent on our ability to borrow money every day from everybody else in the world. And the only reason they do it, in spite of the fact that we're in such deep debt, is because our economy is the strongest in the world. And so as all of the options, even though on the face of it, we're not a good risk, we're the best of the bad. We take one tumble, there's other places besides here. And the cost of being able to talk people into lending money so that we can keep operating in arrears, in debt, would go up. The cost of our ability to keep our economy going would go up. So our economy wouldn't keep going the way it is. We'd have to get used to a much reduced level of the things that we are comfortable with now. Change in investment flows. I kind of touched on this a little bit, but why would people bring money to the United States if we suddenly are in a much worse position than we are now, and we're no longer the best of the worst? What if the best of the worst is someplace else? That's where the money flows. And we would see a tremendous negative impact if all the money started going other places besides the United States. Okay? So that's the reality. Now, if you are good at trading, does it help? Well, sure it does. Sure it does. Because this change in the world that would happen would impact a lot of people's employment. And if you're able to trade the markets, as Tripp said, to replace your income in a few hours a week, then you could do a few things that others are not going to be able to do. You can stay where you want to stay instead of having to move because you can't afford the house you're living in, or you lost the job and you've got to follow a job someplace because you don't have a choice. You have to go someplace to find the job. Your ability to survive would be enhanced greatly if you were good at trading. Okay, let me raise something else. Last time you guys and I got together, we talked about AI. Guys, AI is a two-edged sword. It can be utilized for good and for evil. I sat in a restaurant last night, and for the first time, this was kind of cool, kind of scary. We ordered our food. I heard a noise. I turned to my right, and just in time to see a robot stop at our table. The robot didn't have a face. It did have a screen, and it had receptors all around it, and it had 3 different trays, and our food was there, and it said, "Please take your food." I looked at my wife and the other people we were with, and I said, "Are you serious?" And when you took your food and you passed it around, it said, "Thank you, enjoy your meal," and a couple of other things, and then it turned and left and went back to the kitchen. And we're talking, and the waitress who had helped us out came walking over, and she says, "Oh, Eva got here before I did." What? Who? Eva? Yeah, Eva, that's what we call her, Eva. They are the second restaurant in the entire state of Washington to have one of these. Okay, second one. And this little Eva, did a pretty good job and literally is taking the place of one of their employees. So Eva can come out and go to the particular table. It knows exactly where to go, goes to the edge of the table. If you're sitting there, it'll move over a little bit. And it's set up to where it slides, and the top tray slides over the table a little bit so that you don't drop anything on the floor. And you literally just take the food off and you pass it around, and then Eva talks to you and then says goodbye, and then heads back to the kitchen to get the food for somebody else. Okay. In AI, there's an interesting battle brewing right now. Have you heard that Microsoft and Google are now at each other's throat? I mean, this is going to be a lethal bloodbath here. It is going to be a real fight. Google has spent billions hooking up with the creative forces behind ChatGPT. Okay, Google has come up with their AI called Bard, because ChatGPT is turning out to be potentially a better search engine than Google or Microsoft's. And so Microsoft has jumped in bed with ChatGPT, and Google has brought out their own Bard, B-A-R-D AI, which miserably failed on its, made a huge mistake on its maiden voyage. It's what is it? The publicity deal where they introduce it to the world. And so they are doubling down and throwing billions into embracing that and trying to fix it, because the competition, we're going to see a huge competition between the two. Is that good? Well, it might make for better search engines, so maybe there's some good in it. There's all kinds of good that could come out of AI. But because AI can be used in a very ugly and very sinister way, it will be. That's just nature, human nature. Brilliant people will see opportunity and they will use it. So this is something that is going to be something we have to deal with. And whatever the repercussions are, having a solid ability, a source of income, being able to trade independently is going to give you one more edge against some of the things that are coming at us that we don't even really know what the consequences are going to be. Are they going to be disruptive? Yes. Will you be on the positive side or the negative side of the disruption? I don't know, and neither do you. But it would be really nice if you had it from a security standpoint, a way to hold your financial independence and the ability to stay or go wherever you need to go, not be impinged by whatever is going on around you. I think is a good thing. Okay. Tripp said, at least you don't have to tip the robot. Well, I'm sure they will figure that out if they haven't already. Okay. Tripp said the dollar may be worth 50% of its value if it happens overnight. I've heard all kinds of predictions. I've heard some smart people say, it's not going to not be any big deal. But, the 30 to 50%, 25%, whatever that number is, I believe that's what happens. And it would be instant and it would be devastating. Okay. Let's see. Brenda says, as a former VP of a union, I don't like the idea of robots replacing humans at all for profit. Yeah, I mean, it's a controversial thing. It could be good, could be bad. It just depends. So what about flights to safety? Well, how do we protect ourselves? Well, historically, we go to hard money, right? Gold, silver, hard money assets. That's one thing. Other thing is resources. Where do you go? Where do you, as a flight to safety, where do you protect yourself? What do you put assets into to hedge? Well, hard money is the go-to, but there's other things. There's resources. If you think something will continue to hold value as a resource, it could be a commodity, security even, whatever you think it is, that's fine. But what we want to consider is this: finite supply and finite resources. The thing that makes things valuable, especially in a crisis, is if there's a finite supply or there's finite reserves. Now, this is important that you have this in understanding in your mind. If there is only X amount of something in existence, it has value. Okay. If there is only access to X amount of that thing, whatever it is, it has value. So we're talking about finite resources and finite supplies. Those are places where you can go to for flights of safety if things get tough. Okay. What about cryptocurrencies? Well, in my mind, cryptocurrency is a little bit like herding cats. It's a reality. It's here. Is it here to stay? Probably. I think so. Probably. Is it clear what its role is and where to participate in it? I don't think that's clear at all. Okay. Is it going to be compromised? Likely, in my opinion. Why? Because there's too much at stake. Guys, the big dogs win. Cryptocurrency is a disruptor. But if the powers at B can influence and can overcome the independence of cryptocurrencies, if they can get control of it so that they can regulate it, they will. That's been happening since the first time cryptocurrencies were introduced. There has been efforts being made by not only our government, governments around the world, and their influence or the influence on those governments by the big financial institutions in the world. There's been an attempt to gain control of something that was designed to be uncontrollable. Cryptocurrencies were designed so that they would not be subject to a central power, a central authority, a bank, a government. So as soon as they're on the market, banks and governments are doing everything they can to get control. Imagine that. Will they succeed? Historically, the answer would be yes. Historically, they probably will figure out a way to do it just by the blunt force trauma, just because they ultimately they have the bigger stick and they can. That's the risk. In the meantime, it's very chaotic. So I think there's value there, but I don't think that it is as a pristine environment as some would like you to think it is. It's just so volatile. So for whatever it's worth, it's maybe one paintbrush in your bucket of paintbrushes. It's certainly not the only one. Okay. Jennifer says maybe food and water would be resources. Exactly. They would. That would be an example of resources. Okay. So get good, guys. Get good at trading, because you're going to need to be good at thriving, or you're going to be focusing on just surviving. And that will be the option in the future. And I think your being able to be good at trading is going to largely impact your ability to thrive or just thrive, or just survive, rather. It's the thrive versus survive. You can be independent or you're going to be dependent. The global movement, and this is not even a conspiracy anymore. It used to be thought that this was a conspiracy. It's not a conspiracy. It's talked about every year in Davos, Switzerland, and now the last 2 years in particular. They're not even hiding. They're not even hiding it anymore. There is a strong coalescing union of powers around the world, despite of whatever other disagreements they may have. They are coalescing around this idea of a global governance, global currency, global. Why? Again, it's control, it's economics, it's power and money. Okay? Enemies will combine if something is mutually beneficial. And the idea of having the populace of the world under a generalized control, you take out the outliers, you take the independents and the troublemakers, and you knock them down, and you bring the undeveloped up into a more developed state. Now you have a bigger market to market to. You have a larger continuum to draw from in whatever endeavor they may focus on. It's a bad thing being masqueraded in my mind around in the auspices of this will be better for mankind. This will be better for everybody. Look at the global benefits, yada, yada, yada. To me, it's the scariest thing in the world. And it will have a lot to do with your independence or your dependence. I like the idea that there will always be markets. I believe that. I want to believe that. As long as there's markets, and as long as there's some ability for you to communicate and access those markets digitally, you can work anywhere you want. Wireless means flexibility. Anywhere. At the beach, in the mountains, wherever you decide that you need to be safe, to protect you and your family, to have the lifestyle you want. As long as Skylink's up there, go Elon. As long as Skylink's up there and I can access markets, I can generate currency, I can generate independence, I can generate some flexibility. Okay, wherever home is, you can work from it. And this is one of the ways to do it. Could you also do everything we're talking about by being a affiliate marketer with Amazon? Well, yeah, if that's what you want to do. And there's any number of things out there that you can do as long as you have access to the internet. I get that. But trading is one of them. And it's a common denominator here in this group. So my opinion, like the hurricane, you either get in it all the way or you stay out. Don't go halfway. Don't go halfway. Either get in, pay the price, get good at it, or stay the heck away. Do something else. Do affiliate marketing. But trading the markets, guys, is incredibly frustrating and dangerous if you don't get good at it. It's just, there's really no middle ground. I guess the stay away from it could be long-term investing. You just buy something that you think is good and you sit back and hope that it works. That's staying out on the fringes. But if you're going to trade, you're going right for the middle. Get there, get to the eye, get good, and drain it. Get everything you can from it. Okay. All right. Any other comments or thoughts? Otherwise, I'm going to switch over to the charts and we'll spend a few minutes. This is where you guys get to pick a chart. I'll help you analyze it, evaluate it, look at it. But if you have any other thoughts, drop them in. Otherwise, I'm heading over to charts. Okay. I'm working multiple screens. You ever lose your mouse? I'm looking all over. Where is that thing? Okay, there it is. All right, we're going to switch over to This one. Okay, do y'all see charts pop up here okay? Okay, good. First request was Amazon, then we have AMD. All right, what do we need to talk about on Amazon? What's the question? I'm going to take a look at it and I'll start just jumping in, but you need to tell me if you have a specific question on this, okay? All right, first of all, when I do charting, guys, first thing I do is just identify some the landscape by the biggest features in the landscape. One is the all-time high. You can see here we got what do we look at? 187. And we go down here to, and this is just a little over a year ago, or not quite a year ago, rather, not quite a year ago. We come off of 82. And we see that on the descend from the top to the bottom, which took place over, let's see, November 21 to December, January of 22. So just a little over a year. We go from 187 down to 82. And we do it in one. There's one rotation, two rotations. There's the third rotation. There's the failed fourth, W bottom right side up. And now we have a change. Okay, we have a change in direction. So what we're going to do is we're going to say, all right, we came down this slope line here. Grab the end of this. There we go. 1, 2, 3 rotations. The fourth one was a double bottom right side up. Everybody know what that means? My analogy on this one, guys, if you sat down on a nice padded vinyl chair and you sat up, your butt would leave a nice impression of a W bottom, a nice double bottom where both sides left and right are even. Okay, I say that knowing that in your mind you're going to go, what? And you have this image of the impression that your butt leaves getting off a chair. True, that's a double bottom, it's balanced, left side, right side. But if you got up off the chair and one side was deeper impression than the other side, you would have known that you didn't sit down on that chair firmly with both cheeks, right? You sat down on one side, and before you lowered the other side, you said, nah, I'm getting up, right? So when you have a double bottom, the right side is up, and that means that that second dip wasn't nearly as firm or committed as the first one, which was a bullish or a bearish retracement. And it's bullish because it didn't go all the way down. Now, if you want to stretch this analogy a little bit farther, you could see a reverse head and shoulders here. There's a shoulder, there's a head, there's the other shoulder. Yeah, that's possible. I don't quite see it that way. I think it's more of a double bottom right side up pattern. And a double bottom right side up pattern is more bullish than a just regular double bottom. Both of them are considered bullish reversal patterns. But the double bottom right side up seems stronger to me. Okay, it always has, and I think there's some evidence to back that up. So now what do we have? Well, we've broken a almost 1 year descent, a reversal, pretty significant one. And so now we start to the upside. Let me move this over just a little bit. There we go. So now we start an upside motion, and we count the first rotation as one. We're in the second rotation. We have a gap today, by the way. So even though this surge up has been pretty significant, and you would look at this and say, is there, let me pull this back just a little bit. There we go. Is there a pattern involved? And guys, what we can do is we can start here and we can lay up a, you want to go just about like this. We want to extend this out. Okay, there's our angle of attack. And right there, we're looking at potentially a resistance point. And so even though we've had a gap to the upside today, what if this gap doesn't follow through? What if it turns around in the next few days, next week, and it trades back down through the gap, and then it heads down? I would be looking for target support down around this area right here. Okay. What if it moves up farther? Well, then you look to the left and you say, well, what have we got here? We have, hold still. Sorry about that. We have the next resistance target right here of, what do you got, about 160 or 146? Okay, this is the next major resistance level right there. Will it happen? I don't know. But if it pops up here, it'll make a lot of sense. So this is what I would be looking at for Amazon right now. I'm going to look at the current upside channel, and I'm going to look for cohesion and following the support and resistance levels here. I'm also going to keep an eye back here on significant influence that's going to come in from recent past. This major resistance and reversal area, guys, this went from 147 down to 88 in a very short order, 3 months. That's a huge drop in 3 months. Okay, now we're fighting our way back. Is there going to be resistance when we get back up here to the 146 range? Answer is probably. Historically, I would say yes. Okay. Next resistance level would be back down into the pattern or support level. Resistance anywhere following this angle of attack right here. All right, is that helpful on Amazon? Let's go to AMD. All right, Trip, let's look at AMD. Question on it? First, before I jump into it, I'm just going to start, but he says, has finally broke out of its 3-week box. Okay, so let's zoom in on this just a little bit. All right, so Trip is saying we spent 3 weeks banging around in this zone right here. And what did we do? We came back and we filled a gap. Then we came back up. And Trip, because of this, I'm going to fine tune this just a little bit. Here we go. There's where the price consolidation was, right there. For that few weeks, that established a support level. Okay, that was the opening of the gap. It was repeatedly reiterated here for days, almost a full week. Then it rallied back up, failed at the same place, came back down, and then it busted through. When it busts through, you immediately look for a gap fill with this concentration right in here, which is exactly what it did. Okay, and we look for correlation. We look back, say, oh yeah, there's price activity back there, a significant fail point. We got up to that point, we gapped above it. Now we come back and fill the gap. So once we fill the gap, Trip, your options are what? Your options are to continue in the bullish run to the upside or to fall back down and find support. Was this breakout significant? Yes. Is it sustainable? We don't know yet. How are we going to know for sure? Right here at 106-ish, 108, this is where you're going to find out. If it comes back down and tests this is very significant. Opening to the gap, fill the gap. If it comes back down and tests this could be a great launch point that says, no, we're done with this. We're going to stay on the upper side of this and continue our upside move. Great. Or it can come down and break it, at which point it'll look for support on the long-term uptrend. Keep in mind, Trip, 1, 2, 3, 4. You've got 4 rotations. How many times do bullish patterns rotate before they fail? Generically, we say 3 to 5. But we're talking about AMD. So we look back, say, well, where was the last run? 1, 2, 3, and it failed. Let's go back and find another bullish run. So we go backwards and say, can we find another bullish run with any kind of a pattern? So we'll go back here and we'll say, there's one. 1, 2, 3, 4. It collapses on itself and goes down. So we don't have any history over the last several years that would indicate that this pattern could run more than 4 and maybe a failed fifth, but not a higher. and we're already at 1, 2, 3, 4 with a lot of gusto here. Is it possible, Trip, that it's about time to take some profits in this thing? Maybe the people that are trading AMD are thinking, wow, I think we squeezed about enough of that orange. You know, we're not going to get any more orange juice out of it. Maybe we need to go back and get another orange. Okay, so I would look at this as a general guideline, and then I would put on my parallel lines and I would draw this up. Hang on, I didn't do that right. Let me get this again. Not doing exactly what I wanted it to do, but that's okay. Oh, I was trying to draw the rectangle. Sorry, doing the wrong one. My bad. Here we go. Watch this. Did that not activate? Try this one. There we go. Tools aren't operating right. Here we go. So there's the regression line. And what we want to do on this is extend this out and see, does this have anything to do with the current trend that we're in? And the answer would be no, it does not look like that does. All right, don't force it. If it's not there, we'll change and say, well, let's start from a different place. And let's see if we can pick up anything on this angle of attack that we're running right here. So we go from the starting point to the, there we go, right up here. It's operating, my mouse is operating in a delay, and so I get impatient, and when it doesn't do what I want, I click the button and I shouldn't. There we go. All right, so that's running through the current pattern, and now we look for this. Can we extend this? All right, and if this is what's driving it, and it looks to me like it is, because there's a strong correlation there. Let's draw this right here. Right to the current date. There we go. And now we can extend out. Right there. Okay, so now we've got correlation between the tops and the bottoms on this run. This would look at a 1, 2, 3 rotation on this. I would follow these guidelines right here on this channel as far as targeting, and then I would overlay it with what's coming in, influence on the left. But my comments earlier, I stand by, and that is this area right here is the significance, 108-ish right here. That's where the fallback is likely to generate the most interest amongst the traders to test this. So if we see this fall back around this 108, that right there would be the do or die. We either fall back down and we go all the way back down to this angle, if the initial one, and this support level in here, or else we launch off of that, and that would be the start of the big fourth rotation on the current pattern. Okay. All right. Thanks, Jennifer. Take care. You too. You have a great weekend. Let's see. AMD finally broke out. I hope so. 3 to 5. I'm trading the downside today. I would agree with that, Trip. I really see, I mean, it would make a lot of sense if it drops back down to test the 108 area. I would love to see that, because that's going to force the traders to stay above or else give up on this thing. And if they give up, if they can't keep it above that line, they'll drive it down, and you'll probably see it move down into this area. But if the traders can test that again, then you got a huge, nice upside from the next run. And you got, you know, historically, you probably have one more good rotation to the upside. But I would love to see a retest of this nice double bottom right here. All right, take care, guys. God bless. Have yourself an amazing weekend. You're welcome, everybody. Thanks for the comments. Always enjoyable, you bet. Thanks. Take care, guys. God bless. Have a great one. Bye.